Now we're gonna go on to the trade and other receivables. All right. So now the trade and other receivables, I find it best for us to actually prepare the trade and other receivables notes. It makes life better. Okay. So now you can go. Let's come over here. All right. So over here we have the trade and other receivables note. It's empty. So please just take 2 minutes and try to fill this the trade and other receivables table up just with what goes in the trade and other receivables. We'll do the amounts together. Take 2 minutes, pause the video and do it now. Congratulations if your trade and other receivables table looked like this. So we have net trade debtors, we have our prepaid expenses, we have our accrued income, and we also have the SARS income tax, provided that it is receivable. Okay? Then now, the only thing we're gonna do now, we're gonna look at the information that we were given. We're gonna see what on this table goes in the trade and other receivables table. All right. So now we're gonna come here. We have our trade debtors. Trade debtors on 2017 we have 128,000. So we're gonna come on the trade and other receivables and input 128. So over here we have our 128,000s, and on 2016 we have our net trade debtors as 98,300 rands. So we come over here, we say 98,300, right? So from here we're gonna look for prepaid expenses, accrued income, SARS income tax, and all of those. All right. So now, in this case, we have our prepaid expenses 3,200 in 2017 and 1,900 in 2016. All right. So we're gonna come to our note again to say 3,200 on the prepaid expenses, 3,200 rands, and on the 2019 we have 1,900 rands, like this. All right. So now, anything else you can just put a dash on it, because we don't have anything else from our information that goes in the trade and other receivables. All right. So now here's a note that I want you to take. The SARS income tax. SARS income tax, you do not include it when you are preparing. Please note this thing. You do not include SARS income tax when you're preparing the changes in working capital. Okay, so this means that the SARS income tax part, we are just going to leave it out. We're going to delete it, in fact. All right, just like that. And then we're gonna be left with these three, or anything else that goes in the trade and other receivables apart from the SARS income tax. All right, I know someone is probably asking, why don't we include it? That is just because we already have the income, the taxation paid note. Okay, so we don't include tax on the trade and other receivables note. All right, so adding all these together, we have 131,200 rands, and on 2016 we have 100,200 rands. All right, now that we have found our totals, this is where now we compare if we had an increase or a decrease in trade and other receivables. All right, so in 2016 we had 100, 200, and in 2017 we had 131, 200. So which one is bigger? 2017 is the bigger amount, which means there was an increase in our debtors. All right, so now an increase in debtors suggests that we gave debtors stock on credit and did not or haven't received the cash for the stock yet. All right, so that will be an outflow of cash. Okay, so we're gonna treat it just how we treated inventory. You're gonna take the balance at the beginning and then you're gonna subtract the balance at the end. If you get a positive, it's an inflow. If you get a negative, it's an outflow. All right, so we're gonna come here. We're gonna come here and say oh yeah, here we're gonna come right here to say we're gonna look at these two amounts. Okay, so we're gonna say balance at the beginning 100 200 minus 131 200. So in our brackets, remember I said to always make use of brackets. Okay, so we're gonna say 100 200 minus 131 200 rands. Right, then after so doing, you're going to get your amount as 31 thousands. So over here we're gonna have 31 thousands. So bear in mind what I said, that this will be an outflow of cash, meaning that it's supposed to have brackets, supposed to be in brackets. All right, then we're gonna have the increase or decrease in other payables. We're gonna do the same thing as we did here with the trade and other receivables. We're gonna go to our information. After going to our information, we're gonna look for everything that is listed here that falls under the trade and other receivables. All right, trade and other payables, I'm sorry. So we're gonna go to our trade and other payables table and do likewise. So on trade creditors, we have 201 600 on 2017, and we have 221,000 on 2016, and that's all that we have on our table. So meaning that on everything else, we're just gonna put a dash like that. All right, so now bear in mind that in the trade and other receivables table, I said we do not include SARS income tax. That also applies for the trade and other payables. So we're just going to delete. We're gonna delete the row of SARS income tax and be left with everything else. All right, so here we're gonna have 201 600, then we're gonna have 221 thousands. Then this is where we compare now. So in 2016 we had 221 thousands, and in 2017 we have 201 600 rands. So that only means that there was a decrease in trade and other payables, meaning, so this suggests that we actually paid our creditors. So if we pay our creditors, that means, that only means that we took out money of our bank account to actually give to our creditors. Okay, meaning that there is an outflow of cash in the business. All right, so we're gonna come here and say there was a decrease in trade and other payables. So you're gonna come here and say open your bracket and actually say, so in this case, yeah, trade and other payables, we treat it differently. We don't take the balance at the beginning. We take the balance at the end and subtract the balance at the beginning. Whatever sign we get, we go with it. All right? Bear in mind, it's different from the inventory and the receivables. This is the trade and other payables. We use the balance at the end. We subtract the balance at the beginning. Okay? I hope that makes sense. So the balance at the end, in this case, it was 201,600 rands. Then we subtract the balance at the beginning, which was 221,000. Then we're gonna total those out to get an amount of 19,400. Now, bear in mind what I said. I said that if you get a negative amount, it is an outflow of cash. If you get a positive amount, it is an inflow of cash. So in this case, we got a negative amount, meaning that it was an outflow of cash, and it's supposed to be in brackets like that. Then from here, all you do is take this amount, work these three out to get the changes in working capital. So our amount after totaling these three out will be 11,600 rands. So it's going to be 11,600 like that. Okay, so everything you calculated with its sign, you're going to say 62,000 minus 31,000 minus 19,400 rands. Then you're going to get your 11,600 rands. Okay, so after so doing, you're going to add the net profit before changes in working capital with the changes in working capital of 11,600 rands. And after so doing, you're going to get the amount as 225,800 rands. So all these amounts that are in positive suggest that this is an inflow of cash, more especially in the changes in working capital part. Okay, so this is an inflow of cash. This one is an outflow. So let me highlight these for you. This one over here, because it doesn't have brackets, it's an inflow of cash. And these two, because they have negative amounts, they are outflows of cash. Alright, and that's how you prepare your cash generated from operations. This was a long video, but otherwise, nonetheless, I hope you enjoyed it. I hope you enjoyed the lesson. If you enjoyed the lesson, please like, share, and subscribe to our channel for more videos like this. We'll see you in the next video. That's my time. Prime out.